Miko Bacomo from Rise Above Learning Institute. In this video, we're going to be talking about four things. Number one, what is a payday loan? Number two, how much interest rate do payday loan companies typically charge? Number three, what requirements do you need to get a payday loan? And number four, how to avoid payday loans as a whole. I know what you guys are probably thinking. What is the topic of today's video? No, I'm just kidding. If you haven't gotten it yet, the topic of today's video is payday loans. I know what you guys are really thinking though. What makes me qualified to talk about payday loans? So for those who don't know, the first 2.5 years of my career here in Canada, I actually spent it at a mainstream payday loan company. I've worked my way up from a financial service assistant or a client specialist, as they like to call them, to a branch manager role. I've worked at very, very small payday loan companies that have just opened up their doors for the grand opening, all the way to companies that have well-established roots in the neighborhood. So I've seen it all, work with hundreds of thousands of customers within the 2.5 years that I've been with the payday loan company that I used to work for. So you guys better believe that I know my ins and outs of the payday loan world. With that being said, I'd like to start off the video with a quote from Robert Kiyosaki, which goes, "Good debt is a powerful tool. However, bad debt can kill you." Although I'm a big believer that lending money to leverage it is always fantastic, but it needs to be balanced out with how much interest you're paying. And with this payday loans, let me tell you, you're paying quite a bit of interest. And I'll go over that in more detail in the next coming slides. So stay tuned. So for those who don't know, what is a payday loan? A payday loan is the building to my right, point to my right, if you guys can see it. It's typically a big, bright yellow building, with painted glass tiles or no, sandblasted glass in front of you, just all up in your face saying $300 loan for $20, $200 loan for free. We're simple, fast, friendly, no credit check available, payday advance today, cash in hand today. They make it big, all up in your face. But they are, as a whole, they're a financial institution that provides paycheck to paycheck loans for any applicable and possible Canadians and North Americans, right? Like this is probably applicable to, payday loan companies as well out in the UK. However, this video is meant for Canadians and Americans. Payday loan companies are typically low friction loans, which means they don't go through a credit check. You just need to prove income to them. They don't need to verify your employment. You just need to show them that money's coming in through a paycheck or a bank deposit, and they'll give you cash on hand right on the spot. The sales hook for most payday loan companies, though, is $200 for $20 or $300 for $20, whatever it may be. That's how they get people started with their payday loan journey. So you might be asking, what are the rates for payday loan companies? Why am I so passionate to talk about this? Well, the rates for payday loan companies are typically 10% every payday, and they can get as high as 23% every payday. Annualized, the rates are 120% to 598%. That's 6 to 29 times higher than credit card rates. Let me repeat that again for you guys. They start at 10% and can get as high as 23% every payday. Not every year, but every payday. Annualized, the rates are 120% to 598%. That's 6 to 29 times higher than most credit card rates, right? Expressed as a dollar value, if you borrow $1,000 at 23%, you need to pay back $1,230. Most people obviously don't start off at $1,000 with payday loan companies. They like to try them out first, see what they're about, see what the advertising is. But let's express it with a lower amount, right? Let's use a lower example. Let's say you borrow $100. You need $100 to get you from, the 15th to the 30th. You're going to take a $100 loan from a payday loan company, right? Now you got to pay back $123. So what's the next plan for you? If you haven't budgeted again for this paycheck, you're probably going to take a $200 loan. And with this $200 loan, now you got to pay back interest on that on the next paycheck, and then the next paycheck, and then the next paycheck. So it's very easy to go from a $100 loan from a payday loan company to up to 50% of your income. I've seen it happen time and time again because people fail to follow a budget and people fail to have a budget to begin with. With credit cards, how do payday loans compare? Well, like I mentioned earlier, most credit card companies, their rates start at 9 to 0.99% to 19.99% per annum, and they're compounded monthly. Stick around for my next few videos, and you guys will find out what I mean by compounded monthly. A minimum payment on a credit card usually is about 2 to 3%, right? Now, it's not advisable that you pay 2 to 3% on your credit card. However, just to show you guys an example, 2 to 3% on a $1,000 balance with your credit card is only 20 bucks, right? 20 to 30 bucks, which means you get to save more of your money long term as opposed to paying paycheck to paycheck where you're paying $230 every single paycheck. Now, again, this is not advisable that you do, and it's not advisable at all whatsoever that you're just making the bare minimum payments on your credit card. However, it is a possibility to do on your credit card, and it does allow you to have more money at the end of your month as opposed to payday loans. Now, what are the requirements to get a payday loan? Like I mentioned earlier, in the earlier slide, it's a zero to no friction loan process, right? They make it very, very simple for people to go in and just get the loan. So all you need is either your pay stub or your last 30 days bank statement showing deposits from your employer, or if you're government assistance, they provide that as well. They provide loans for you. They also provide loans on child tax. They provide loans on welfare, whatever it may be. They'll loan you the money as long as you can prove that deposits are going into your hands. Last but not the least, they also want to be able to take that money out from your bank account. So they ask you for your void check, right? So you just need to prove income and you need to prove a bank account where they can take that money from you. So it's so simple to get a payday loan that, sometimes the easiest sales pitch that a payday loan person has, because they also cash checks, is if I were to give you X amount of dollars back to you, what would you do with it? And since they already have your pay stub, because you're cashing your paycheck there, all they need to get from you is your void check. So next time you're cashing your paycheck at a payday loan company or a check cashing company, be very wary of what they're trying to say and what they're trying to get you to do, because you don't want to get sucked into the system that they have. Another quote that I like, rounding up this video, is from Dave Ramsey. His quote goes, a budget is telling your money where to go instead of wondering where it went." A lot of us right now are wondering, at the end of the month, we have not enough money. By having a budget, you can understand where your money's going, and you can understand, where you're putting your money to work at. Last slide, but not the least, obviously, is how to avoid payday loans as a whole. Now, if you're already in a payday loan, there are different ways to go about this. The next slide, I'm going to talk about, ways to contact me and ways to get in contact with my company. But if you're not in a payday loan company just yet, and you're also thinking about it, it's better that you look at this slide and ask yourself the following questions. Do you have a budget in place? How is your budget structured? Do you follow that budget, right? And that's with your budgeting portion of it. Cash flow analysis. How much money do you make per month? Are you not making enough money per month where, your cost of living is significantly higher because of rent, because of things that are not in your control, that you need to have yourself in a, half decent neighborhood to make ends meet, whatever it may be, right? If your income were to stop today, do you have sources of income to maintain your current lifestyle? People get into payday loans because they have a lifestyle that they need to maintain. Maybe you need to decrease your lifestyle a little bit, right? Is your net worth growing at the same rate of inflation? And this is what I meant earlier. If you're not making enough money to combat inflation, like if you made $12 5 years ago and you're sorry, $12 an hour 5 years ago, and you're still making $12 per hour now after inflation has happened, you got to really reassess what you're doing with your employment, right? Because inflation right now on an average is about 1.90% per year, right? It's what we've been seeing over the last 10 years. So what that means to you is if you're not constantly growing your income by at least 1.90%, you are getting caught in the crosshairs of inflation, and within 10 years you're not going to be able to maintain the lifestyle that you're currently living today with your current salary today. Last but not the least, if you guys have any questions at all whatsoever, feel free to reach out to me at growth@riseaboveinstitute.com or visit our website at www.riseaboveinstitute.com. feel free to leave your information there, and I can provide you with a free consultation on whether or not, payday loan will work for you, probably won't, or what the best solution is for you to get out of a payday loan. If you guys are interested, we also offer these classes and more classes ongoing on a weekly basis. So again, feel free to visit www.riseaboveinstitute.com, leave a like, share the video, and also don't forget to comment down below. So hope you guys enjoyed the video. Take care.